Everybody, this is Jim at SP500chart.com. It is Sunday afternoon, a little after 2 o'clock on the last day of January 2016. And frankly, the way this January has gone in the markets, I think people might be glad that January is behind us and we get to jump into a new month with perhaps a different result than January. Before we get into that, though, I need to remind you that the website and this video are for educational purposes only, and nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Before we get started, let me say thank you for your patience with me on Thursday of this week, as I was having some trouble recording audio and with my software, and I thought something had gone wrong with the microphone, and I actually ended up trying another microphone, and it turns out it was a driver or something had gotten in and just completely kind of reconfigured my audio, and I had to get a little deeper into it than I realized before I could get that sound to come back. So here I am. How did the week go? Well, it was an up week, which was good because we've had, starting here at the 1st of January, we were down again, then we were up slightly, and then we were up a little bit more. So if we look at this on a weekly candle basis and we really zoom in, you can see there it is. Here's where January started. Boom, boom, then a long tail down here, getting all the way down to around 1813. Remember, a lot of times that long lower tail like we had here, and even like we had here, even though this one didn't really work out, a lot of times that's the sign of a reversal. If you get that at the top, it can be the sign of a reversal. It could be called a shooting star, I think. I'm not a candles expert, but when you have one down at the bottom, it's called a hammer. So we put in this hammer candle last week, and this week we actually closed at the highs of the week, which would seem to imply that we will likely see some gains tomorrow, at least early. Doesn't mean we're going to hold on to all that we gained over the past week, because Friday's gain alone was about 2.5% in the S&P. That's a sizable move. And that was just on Friday. So if we zoom back in now and look at things on a 30-minute chart, here is our week, starting with the 25th through to the close on Friday, and you can see that really we spent most of the week 4 days going sideways, then finally had a nice positive move on Friday. One thing that's kind of interesting to point out here, and that is we are over this trend line right here that I pointed out as being likely the signal that are that big down leg starting at the first of the year is either outright going to just reverse or at least set up a reversal. And so far, that seems to be exactly what is taking place. Now, how long will this reversal last? I can't tell you for sure. I could tell you it's good to be out of this pink danger zone, and in case you need to be reminded of what that is, if we go to a 2-day chart, we have a rather large potential head and shoulders top here, and which would go left shoulder, head, right shoulder. And the pink area that you see is actually positioned between these two lines. Now, these lines look a little funny right now when we look at it on a 2-day chart, but when we zoom in to that 30-minute chart, you will see this lighter pink line is on the bottom and this is on the top. Well, I take it back. What is going on here? That's what's supposed to, well, maybe let's look at it on a daily chart. well, maybe I just said it backwards, or maybe I remembered saying it backwards, but suffice it to say that these two lines are different interpretations of where that neckline should be in that large head and shoulders, unconfirmed, I might say, head and shoulders top. The lower line is based upon closing prices for the day. The upper line is based upon intraday lows. So there you have it. We want to stay out of this pink zone. If you're a bull, you don't want to get back under this. So what are we dealing with here? Well, I think what happened was we broke out over this resistance line, and then we just spent about a week or so consolidating. We did not get a back test down here. Instead, however, we did come back and back test this trend line, which is the closing price trend line for that head and shoulders neckline. And we never closed more than 1% underneath this line, even though we got down to 1813. On that day we got down to 1813, we closed over 1850. So I'm just, pardon me, I know I may be bending my own rules here, but I just felt like giving this market a little bit of slack, just to see what might get pulled out of the hat. And so far, it looks like that might have been a good decision, because if you were looking for this as being a head and shoulders top, and if you were calling this a breakdown, then you would, at this point, you would have to wonder if this is a failed top pattern, because we're once again back over the neckline. The rule, quote, rule, by the way, for trading head and shoulders patterns is that you have your stop about 1% on the other side of the neckline of where you of the opposite of where you think the market is going to go. So in other words, if you had shorted down here at let's say 1826, then you would have looked at this neckline and you would have said, well, the neckline is at 1883. I'm going to put a stop in at about 1915 or so. Well, actually, in this case, you probably would have done about 1915, and lo and behold, we are significantly over 1915. So that would have been a failed trade. But we never closed more than 1% under this pink area. So now if we zoom in and look at things a little bit more closely, what did we do for the week? Well, for one thing, we identified a small potential inverted head and shoulders pattern here. Left shoulder, head, right shoulder. And that broke out actually on Friday of last week, pulled back to the neckline on near the close on Monday. We rallied back up, rallied a little bit more, then we came down and essentially gave a second test to that same area, and actually ended up with a more complete job of gap testing, I guess you could say. We ran into some gap support, started to wiggle around a bit, forming a consolidation pattern here through the end of the day on Wednesday all the way through Thursday. And we pointed that consolidation out and noted on Thursday that it has that it should carry with it a bullish bias. And the reason I said that is because what we basically had, not exactly, but we had a rising level of support with an almost, but not quite, but with an almost level area of resistance. And the psychology of this, what this reveals in the market, is that sellers are selling at about the same level. Now, think about it. If sellers are selling always at a lower level, and it is a significantly lower level, then you have to say there's a bearish trend here where people are getting out at lower and lower and lower exit points. But when you have people getting out at essentially the same level, then what that tells you is whatever is available for sale at that level will eventually run out. And if you continue to see less and less effect from the selling that takes place or is initiated at that level, then it tells you that those shares are starting to run out. So there was a good number of shares to take the S&P from 1903 down to 1873. And then it came back to 1902, and there was a good number of shares left to take it back down to 1874. But then when it worked its way back up to about 1900 again, almost nothing was left. In other words, sellers were done selling. So what does that mean? Well, it means on Friday we had buyers. Now, the other thing I want to talk about is we had the Fed speak on Wednesday of this week, and I made mention that a lot of times when the Fed speaks, the initial reaction to what they have to say, you would be surprised at how often it is in, quote, the wrong direction. And I've usually seen this when the Fed has spoken and there's been an immediate spike up of 1% or 1.5%, and then you come back in 2 days and you see, wait a minute, all of that's gone, and plus we're down another percent or two. Often that initial reaction is wrong. I'm not saying that these people were dumb or anything like that. I'm just saying a lot of times that first reaction to when the Fed either releases notes or anyone makes a statement regarding Fed policy, you just be surprised. Just make a note of that. Next time they speak, watch what happens at 2 o'clock in the markets, and then ask yourself as you examine the markets in the days ahead, see if what happens at 2 o'clock was the right thing or whether it was a head fake that later got corrected, either in the opposite direction. So basically what we had was, here's that consolidation pattern. We broke out over that on Friday, right at the bell, essentially. And now I actually had this line up here on Friday, thinking maybe we were going to run into some resistance here, and we didn't. Instead, we just kept right on up through this line right here, which is kind of interesting, because if we didn't do that, then we would be in a situation where I think we would be forced to consider that maybe we're dealing with yet another rising wedge. And even though it's a little bit of an odd looking one, it would be a rising wedge, because here's support and here's resistance. So let's see what happens this week going forward if the shape of this lower line and this upper line here, if perhaps we create a scenario where this pattern would imply something of a short-term ceiling on things. Right now it doesn't look that way, because that ceiling would be at about 1935, and you can see that we're already a little bit over that. So it'll be interesting to see how the markets open up on Monday, the 1st of February. If this inverted head and shoulders pattern continues to play out as an inverted head and shoulders pattern, then we have to measure our target, which, and you know something, you could even, well, never mind, I won't go there. Let's just measure our depth of the pattern. There's where we go. There's the neckline. There's the depth. This is where it broke out, and that gives us a target of about 1970, 1971. I think when I measured it last time, it ended up being more like 1972. Let's just call it 1970. So with that in mind, if this little pattern down here produces that result, then it will be very interesting to see if we get over some of these lines that should be putting up a fight, because this line, for example, this red one here probably can be overcome, because it is a descending support line that broke to the downside. We know that descending support, when it breaks to the downside, can be overcome. It's not the same thing as ascending support. Descending support, when it breaks to the downside, sometimes that's even a sign that things are getting ready to reverse. Okay, so The other thing I want to point out real quick, and I'm not quite ready to call it this way, but if you look at this chart, you could even possibly make the case that we're dealing with some nested patterns here. Okay? So let's say, for example, that this is an inverted head and shoulders pattern right there. Well, what about it right here? Could this also not be an inverted head and shoulders pattern? As a matter of fact, this one makes a little more sense than this smaller one. And the reason it does is because oftentimes the right shoulder forms after a breakout. In this case, this little right shoulder here formed before a breakout of this line right here. So if we're dealing with nested patterns, again, a small one here, left shoulder, head, right shoulder, and you can see that there's a little action that makes this line appear to be perhaps technically important. If that's the case, then guess what? We have broken out over that neckline, and if it continues to act like an inverted head and shoulders pattern, we don't have a target of 1972, we have a target of 2033. So it's really interesting. Let's just suffice to say what happened over the past 2 weeks has been fun to watch it unfold, and at least for now, it appears to be carrying with it some bullish intent. So guys, I think I'm just going to let it go at that for our weekly review. I want to thank you for being with me throughout this week. I hope you'll stick around for the rest of the year. And oh, by the way, if you're not a subscriber to SP500chart.com, you can do it. It's easy and it's cheap. I guarantee you've thrown away more money on dumber things than getting a daily video technical analysis of the S&P 500 using these trend lines. I promise you, I'm not going to tell you that this is investment advice. I really can't do that. It's for educational purposes only. But I think the markets have been telling us time and time again, have been educating us to the fact that it looks like we still have not found a top in the markets. Even when I look at this big potential head and shoulders top right here, something about this tells me I still don't think the market psychology is there for this to be the real top. A corrective top, perhaps. Something to take us down significantly, perhaps. But the end of this bull run, I don't see the kind of rampant, crazy enthusiasm. Instead, I see people once again worried. And if you make a list of the things that this bull market has been worried about since March of 2009, I'll just tell you a few that come right off the top of my head. The collapse of the auto industry, A. The collapse of major banking institutions in the U.S., the potential nationalization of banks in the United States. What else? The BP oil spill, that sent the markets in a tizzy. The Japanese earthquake and the tsunami and the nuclear reactor over there that happened. Greece in default. Spain, Ireland. The list goes on and on and on about things that have scared the daylights out of investors over the last 6 years. Yet, 6+ years, yet the market has continued to trudge upwards. And I'm just sort of thinking that this mess with China is just going to be another one of those things. That the crash in oil, that's not going to last forever. Oil's going to stabilize. Oil's going to come back eventually. But think about it. Oil goes down in price. That's going to hurt a sector, a large sector of the markets. But what's going to happen when I look at my local gas station right down the road from me? Gas is $1.55. 2 years ago it was what, $3.40. What is that? Well, that's putting more money in the pockets of consumers. That is in the big picture, that is potentially better for the economy than high oil prices and healthy oil profits. The consumer is the guy who drives everything. And consumers, I think, are being served well by low oil. So that's an interesting trade-off. Anyway, I could go on, and I'll just share one more thing with you. I don't think if there's any way for those who are in power in Washington, D.C., and for those who are in power um, in the financial world, I don't think if there's any way they can keep the markets from crashing prior to the elections next November, I think they're going to keep the markets from crashing if they can. And I'll tell you why. Because right now there's a movement towards bringing outsiders into D.C. I mean, witness Donald Trump. Look at him. I'm not going to be a political person here, but I will tell you this: Donald Trump is an outsider, and I don't think the insiders want Trump to be president. And I think they would do everything within their power to keep the economy and to keep the markets healthy, because they know if the markets turn south, and if we go into November and we're on a 20 to 25% annual skid in the stock market, that just makes it all the more likely for Donald Trump to be elected. And I don't think the powers that be want that to happen. I'm not picking sides. I'm not telling you who I'm going to vote for. But I'm saying this: I don't think the powers that be want an outsider at the helm in Washington. So that said, that means I think there's some wind at our back here. Anyway, I've talked on plenty long enough. Just things for you to think about. I'm not an expert news person or a researcher. Those are just my crazy opinions. Take them with a grain of salt, as you do these lines I put on charts. So, guys, thanks for watching, and let's see what happens as we enter this first week of February, and it'd be interesting to see how things get started out. Take care. Thanks again for watching, and thank you for your very kind support.